Is with us. He's Deputy Chief Investment Officer at Westminster Asset Management. Neeraj Diwan is also with us. He's Director at Quantum Securities. Gentlemen, good to have both of you here. Jonathan, the way banks are selling off, sometimes these become self-fulfilling prophecies, right? I mean, you keep saying this will spread, it spreads. And especially true in banking, actually maybe only true in banking. I'm looking at stocks in Europe, and we were just mentioning this 5, 6, 10% lower. And suddenly the world will look very different. I hope we don't go there. But what's your sense? How likely is it that we get a sort of broad banking contagion? I mean, a bigger event. SVB was one bank, but this seems to have spread very fast. Go on.
Yeah, look, I think the issue probably, yes, SVB is a trigger, if you like. I think a lot of us have been thinking markets had been, up to a couple of weeks ago, incredibly buoyant and being somewhat complacent with what the message coming out of the US, the Federal Reserve. And I think we were looking for some sort of catalyst or some sort of event that perhaps would crystallize, the next move lower to reflect the sort of fairly hawkish tone coming out of the Fed. And I think, anybody with experience of 2008, I think the result is you sell first and ask questions later. And it feels very much like that at the moment. I think authorities have acted very rapidly to stem the contagion. But I think, obviously people are just thinking, well, we had all this many, years of effectively free money. What else is going to crop up out there that we're not expecting? And we're in that sort of phase at the moment. I don't think this is at all anything like what we saw back in the global financial crisis. But clearly, futures were up, as was pointed out a moment ago this morning, on the back of this perhaps signaling that the Fed will now have to ease back their tightening rhetoric. But yeah, for the time being, this is probably just a sell first, ask questions later type sale. And we certainly don't see this as broadening out into massive financial contagion just yet.
Well, Jonathan, good afternoon. Absolutely. I mean, I'm going back to that time, 2008 as well. Right now, this seems to be turning into a market-made crisis of sorts, because back then we actually had bad debt. We had securities packaged and there was a whole domino effect. There was bad underlying debt with people not paying up mortgages, which was at the center of that crisis. Here, we probably have an asset liability mismatch at one bank. Obviously, startups in the Silicon Valley not getting easy access to funding. But what's happening right now with the market showing absolutely no confidence in moves from the US government or the US Federal Reserve, could this really spiral out of control? I mean, what should we brace ourselves for over the next couple of days?
Yeah, as I just said, it's interesting to note that this isn't, obviously the Bank of England and what happened in the gilts market a couple of months back, you could argue is the first sort of shot across the bows of what, this liability mismatch or duration mismatch. And this is, obviously what we've seen recently is the second sort of coming of that whole problem. I think obviously, as I said a moment ago, this era of very low interest rates and cheap money, that's clearly been at an end for a while, and we're still seeing the consequences of that sort of running through the system as the system adjusts to the world of higher interest rates. We don't think it is a contagion that will spread, but clearly markets are not in the mood to listen to that. They're selling first, taking a little bit more risk off the table, and then they'll want to see what authorities do, what the Fed says as well. So I think the next few days will be very important, but I think there will probably be some calming noises out the Fed later on today.
Yeah, to quote one of our earlier guests, literally forcing the Fed's hand. I think that's what markets around the world are literally trying to do.
Okay, let's get a Neeraj. Do stay on, Jonathan. We want to get a Neeraj Diwan, Director of Quantum Securities, on the show now. Neeraj, markets tend to overreact, right, on both sides, on the way up and on the way down. They first sell and then they find reasons, justifications, and that seems to be what's happening right now. In the sell-off, have you made any purchases? Would you recommend any buys? Are any stocks which you were looking at earlier now available with the cut that we've seen?
Yeah, good afternoon. Yeah, actually, the way things have happened has been pretty fast over the last week and now early this week, today, the kind of sell off that we've seen. I think that because this is the first day of a major fall, I think one can wait for a day and see what kind of noises you hear from US, whether there's a contagion effect or not, whether Fed does some make some statement which will cool the market. I think it's better to wait for a day. Though definitely, I feel you are getting opportunities. You saw India infrastructure, space doing so well. So infrastructure, capital good was a space where you were seeing so many investments happening, and there you have a good potential for a good EPS upgrades also there. So I think you getting opportunities there, but I think I'll rather today we're not really buying anything and waiting for a day or two to see how things pan out from here.
Okay, no, so wait and watch. By the way, the market has recovered quite a bit from the lows, that is. 224 points or so lower is what you have. And I think we were at 17,114. The market now at about 17,188 or so. Nimesh was telling us earlier on D Street Chatter that there is no, I mean, he did not get the sense that there is a large amount of institutional FII selling or and such. So let's see. I mean, I think those figures will be important. Jonathan, for a market like India, there was FIs were anyway selling, right? There was this move out of the best performing market of 2022 into the least performing markets of 22. So India into China and other markets. So no real change. Is it at the margin? Is it a continuation of the same? And of course, I mean, all of this on the side does not help.
No, absolutely. I think as you rightly point out, that's been a trend that's been going on for a few months now, particularly since China announced their reopening late last year. If you look at the sort of levels, I would say probably most of that trade has happened. We've still probably got a little bit further to go. Yeah, I mean, India has been such a strong performer. I guess the other thing to point out would be the financial sector in India is very strong. There's some very, good private banks, not much exposure overseas, great domestic stories for all those companies. So, yes, there could be a little bit further risk off, and India potentially could come off a little bit, but I think certainly FIIs will begin to start looking at this market again as the valuations have come off.
Okay, all right. We will have to take a break on that note. We will come back in just a bit and keep tracking what has turned out to be a pretty savage market fall. Back in just a moment.